Hello, I'm Joe Milam. My contact information is right over here. And what we're going to talk about now is the different investment stages, investment and acquisition stages. So a lot of companies that we meet with are in this early stage business stage. So they're 0 to 2 million in revenue. So, pre-revenue and early first revenue. So for these guys, the challenge is to not be zero. Not be zero. I mean, this is not a good place to be. Yeah, early stage pre-revenue, I get it, but we're into 2024 now, and everything we're seeing is this is going to be a huge hurdle. It's already a hurdle for you at this stage. 0.05% get funded. 95.95% of you won't get funded. If you're at zero revenue, the chances are almost 100% you're just going to be spinning cycles. So if you're early stage, get to revenue as quickly and efficiently as possible. Grow that revenue through net income. In the event that you have to raise capital, there's no other option, which I will challenge you on. But if you feel like there's no other option, then you need to reach out to your friends, to family, and to local angels. You know what? I really don't care that my handwriting's bad. You're getting the point, right? So friends, family, local angels. When I say local angels, I mean not people on LinkedIn that say, "Hey, I'm an angel investor." Those are the last people you need to deal with. They don't really care, and they're going to not invest. So find people in your industry that are local to you that you can reach out and have conversations with, have coffee with. I have a whole strategy on how you can do that in your local environments, if that is the only option you have. Which again, you need to prove to me that that's your only option. So early stage, really hard to raise capital, very expensive, something we do not recommend unless you absolutely have to raise capital. It's a different story when you move into the growth and more mature sides of the growth stage. So again, different people define it differently. So I was calling it 0 to 2 million. Some say 0 to 5. Point is, it's early stage revenue. But growth stage and mature businesses are 10 to 15 million in top line revenue. It's top line revenue, not net income. Have 20% EBITDA. And EBITDA is basically your revenue before you factor in interest, taxes, depreciation, and amortization. So most investors look at EBITDA as the measurement of the strength of your business. But if you've heard me talk enough, you know that I believe in and really strong around net income. Point is, profitable business here. These businesses are well beyond startup. They're into maturity. They're growing at 20% or more a year. Some industries will be lower, but 20% or more is a really good high growth company. Again, 10 to 15 million, 20% EBITDA. That means 20% of their top line. That's just for a traditional business. Growth stage for a SaaS business would be considered 5 million in annual recurring revenue, ARR. It's a very common acronym that you'll see when you're talking about SaaS businesses or businesses that are reoccurring in nature, not project or some contracts. So the reason, and so once you enter the growth and mature stage, your chances of having a transaction are much higher. They're much higher because look at this. Only 9% of companies get past $1 million in revenue. Only 9%. So there's a lot of investors that want to invest in and acquire companies that are at this stage and greater. So another real interesting thing to think about is when you're in this stage, the higher your revenue and the higher your EBITDA percentage and just EBITDA in general, the more expensive your business gets for an investor. So it's multiples bigger. The more you grow your business, the more valuable it gets. So the message here is to focus on revenue, focus on net income, grow as big and as profitable as you can, and then start thinking about an investor coming in. At growth stage, you have two options. You can take on growth capital, which is a minority partner that allows you to take chips off the table and invest elsewhere and continue to grow the business and have ownership, or you can do a full sell of the business, a full buyout, or allow an investor to do a full buyout. We'll go into more details later about the types of investors, but want to just give you a little bit of a summary on the stages that companies are when we see them, and where there's appetite for investment and where there's not. So this is revenue based. This is where we start talking equity and life-changing money. Thank you.